The next thing I wanted to do was get financial capital. And so the financial capital, I was able to attain that by working on Wall Street, getting a good job, and saving money. And so I mentioned that because in real estate, for me, it takes two or three things to be really successful. One is you can have knowledge. The other one is you have grit. And the other one is you have money. And knowledge is like you're learning about the real estate industry or what have you by any means necessary. The other one is grit. You have perseverance. You keep working hard. And the other one is financial. You have money. So you only need two out of three.
All right, welcome everyone again to another amazing episode. Today we have KR. KR is a stellar example of a young professional. He has benefited from working on Wall Street and has now built a multi-million-dollar real estate investment company with over 100 rentals from scratch. We're going to dive into a little bit of his background at the beginning, how he has accomplished all this. And then we're gonna dive into some actionable tips that we always try to provide on our show. Like I mentioned before, this is the first time that we do a Zoom and also integrated with IG Live. So if you don't watch the whole episode, we're gonna have it on our podcast on iTunes and available on all platforms that you listen your favorite podcast on. So let's start a little bit. KR, tell us a little bit about yourself, man. How you begin and how you go from being in Philly to Wall Street to being this big entrepreneur, man.
Well, I grew up in Philadelphia, single parent household. My mother raising my seven siblings and I. We moved around a lot. We grew up on welfare. For people that don't know, that's what you call your EBT cards now today. And I remember always having to move because the landlords will decide we were always struggling in terms to pay the rent. So I had said at a very young age that I wanted to look at the world very differently. And I recall one point where our house had burnt down and we were practically homeless. And we had an elementary teacher bring us some KFC. She brought original chicken, which I love, and then she brought some mashed potatoes and macaroni and cheese. And I said, "What the hell? I'm a coleslaw guy." And I remember that point because I was looking up at the stars. The third floor was missing. And I remember saying, I never want to be poor like this again. I want to have financial freedom. And throughout growing up in Philly, I said I wanted to be the landlord. I don't want people telling me where to go, when to go, and how long I can stay here. And so I worked my butt off, did really well academically, graduated first in my class and president of my class and debate captain, track captain. Then I got a full scholarship, went to Bowdoin College, studied history and English throughout the school year, and then worked on Wall Street throughout the summers. And then got a job at Goldman Sachs and did investment banking in New York City. And then was working for a hedge fund covering home builders. And in 2009, that's when I bought my first foreclosed property. And then I built my portfolio from single families all the way up to multifamilies. And so it's been pretty crazy acquiring 70 rental units in the middle of a pandemic last year. So it's been quite a journey. And I was able to retire from my full-time job last year as well.
That's amazing, man. German, what do you have? And I know
On
on
huh?
IG people can't see German, but my brother's on, and he's also gonna ask questions.
Yeah, no, man, that's amazing. We came from beginnings like similar to yours, and I don't remember my parents struggling to pay rent, but they had two, three jobs, where yeah, because to us we were raised that bills were religion. It's like you pay your bills first, and then you pay yourself or whatever's left
Mm,
is for us. Um, but we came from a background like that too, where they had to work two, three jobs at a time, and the properties that we lived in were very deplorable. And I remember as a kid, our first landlord, I used to admire that guy. He was very old. He had several properties in the neighborhood.
hmm
They were all D class properties, but this guy was making a ton of money. His family was living they were wealthy, and you
hmm
could see his family, his kids and grandkids driving the nice cars. The actual owner was always driving his old beat up truck, but he was making a lot of money. So So yeah, man, in the transition, I'm eager to know, how you made it, how you made that transition from W-2 job from corporate America to now, be your own boss and have so many
So real quick for
partners.
the IG listeners, just summarize what my brother said in that minute, because I know you can't hear him. But essentially, we came back from humble beginnings as well, and it's important to us to see people, do the same thing. And we used to see the landlord make money as well. So it's important for us to buy our own block and to learn how to do it as well. Um, but going into a question here is, you said you went into Wall Street and then you worked at a hedge fund. How was that experience for you?
So for me, I think in America, I think of capital in three ways. One is intellectual capital, and what I mean by that is you go to school, you have mentors, you read books, you learn the intellectual capital. The other capital is financial capital. And so financial capital, you earn that from a job, you earn that from a business, you may do a side hustle, you may invest in stuff. So I had to get the financial capital. And the third one is social capital, which is the relationships that you build with people to affect change in other people's lives. And so the first thing for me from Philadelphia, growing up in an abject poverty, the first thing I wanted to do is get intellectual capital. And so that's why I went to college, had mentors, graduated from high school. The next thing I wanted to do was get financial capital. And so the financial capital, I was able to attain that by working on Wall Street, getting a good job, and saving money. And so I mentioned that because in real estate, for me, it takes two or three things to be really successful. One is you can have knowledge. The other one is you have grit. And the other one is you have money. And knowledge is like you're learning about the real estate industry or what have you by any means necessary. The other one is grit. You have perseverance. You keep working hard. And the other one is financial. You have money. So you only need two out of three. So in the beginning, I definitely was in a position where I didn't have the knowledge and I didn't have the money. So I wanted to work to build up the capital so I can buy investments. So that's why I kept my 9 to 5 for a lot of years, because I wanted to be able to live a regular life and save the money that I make. So I will buy, for instance, foreclosed property or RE property for $22,000. I will put $17,000 into that house to fix it up and for supplies. Then it will get appraised for $115,000, and then I would take out $85,000. I'll do a refi cash out. Instead of spending that $85,000 to pay for my everyday life or go and buy expensive things, I believe in delayed gratification. So I will put that $85,000 away, or put a large chunk of it away. And then if you do that 10 times, you have close to $850,000 that you're stacking away. And you're also able to keep your 9 to 5. So therefore you can transition from the single families into the apartment buildings because you have that large down payment. So like for my triplex, it was $195,000. Let's make the math easy. Say 200,000. You put 30% down. You only need $60,000 for that down payment. You're putting 20% down. Then if you go and buy like a $400,000 property, then you only need to put 20% down. Then you're going to put $80,000 down. So my mentality and my approach was delayed gratification, continue to work your 9 to 5, build up that cash pile so that you can use that to buy property. And then as it starts to go down, then you can partner with other people and you can buy even more. But that was my strategy.
That's awesome, man. So how was that transition from, the residential to the commercial for you?
Oh, absolutely. Well, the thing is that I think, and I tell people to be very successful in real estate, to make that leap from a single family rental expert to apartment building expert. The first thing you have to do is you need a track record. So what I did is I said, I'm going to hone my skills, really understand how to find these individual houses that are dilapidated or undermanaged, fix them up, learn how to refi them, work with the banks, work with contractors, let people know, look, I have a track record. I'm very successful at these 9 single family homes where I refi and take the cash out. The next thing you want to do is relationships. You want to leverage your relationships. And so I built relationships with banks and also with contractors. I understand how to put the processes and systems in place so that I can streamline my process. And then you're able to leverage your track record and your relationships. You have this reputation, and then you're able to use that reputation to make the transition into apartment complexes. So that was my transition. So I went from owning like one single family in 2009, then owning in 2018, I owned 9 of them. And then in 2019, I owned 35 rental units. That's when I started buying apartment buildings. And then by the end of 2020, I owned 105 rental units. So the transition for me has been seamless because I really focus on understanding my knitting and became really good, a master at doing the single families. And then I was able to use that framework and systems and best practices to apply to my apartment complex. So that the transition for me was pretty smooth.
No, that's awesome, man. German, what you got?
Uh, no, I like the transition too, man. But so what markets are you focusing on, or were you focusing on when doing the single families?
Okay, so what markets I was focused on? I started in the Philadelphia area. So I bought one single family like in West Philly. Then I bought 8 single families in Philadelphia. And then I bought one single family in Harrisburg. And now what I own is I own 8 single families in the Philadelphia area. And I own 6 single families in the Harrisburg area. And then I own in total 85 rental units in the Philadelphia area, and then I own 20 rental units in the Harrisburg area. So what I did is I first focused on the city, and then I was able to start expanding on the surrounding suburbs.
Right.
Because I like that method because what it is very systematic, and you're able to leverage your relationships with contractors and banks because the banks know those markets, the contractors know those markets. And if you put your own team together, I have my own property management team and cleaning team and things of that nature. I'm able to use that team and get this best pricing, figure out how the conditions are, know about the market. So I'm able to leverage my market expertise.
So let's talk about team. You mentioned team, right? Unless I cut off my brother here. Sorry.
Yeah, I just got one question, man, because people ask me this all the time, and it seems like very common sense. But one, what does the relationship with the bank looks like, and
Perfect.
who exactly in the bank do you build that relationship with? Is it the
Excellent.
teller? Because people
Yeah,
ask me, it's like, do I
that
just
is
go
a
to the
great
teller? I'm
question.
like, yeah,
Yeah, that is a great question. So I think it's incredibly important and the question is, what does the relationship with a banker really look like? And so what I tell people is, look, think about your relationship with a bank the same way you think about finding your lover. If you and I go on a date, you're not going to give me a engagement ring on the first night unless you're a fool and I'm gonna be taking all your money like a gold digger. But we don't want you to be that way. So what you're going to do is you're going to go on a date. Just like think about how you go on a date, you get to know the person. So you spend time with the person, you ask questions, you figure out how they operate. And then you can decide if you want to move forward, because a lot of times you will go to the altar, but you won't get married. And now I'm going to help you think about that in terms of the bank. So with a bank, you want to primarily, you might want to start small or start somewhere in your local community. Most people like to date people who live close by. So I went to a credit union. I go to the credit union and I say, can I talk to like your loan officer? What they're going to do is say, you can talk to the loan officer. Then the loan officer, I want to tell the loan officer something about myself. So I'm going to tell him I have a full-time job. This is my credit score. This is my dreams and my vision. And that is the way the bank is going to get to know you. And then you ask the bank, do you provide lending for single family homes or apartment complexes? So you want to get to know the bank wants to get to know you. What are your criteria for the loans? Then if you and the bank click it off and you really like each other, then you're going to say, oh, I'm going to put a little money into this relationship. So you're going to open up a savings account. You're going to open a checking account. Then if you really like them, you're going to say, we might can do a little getaway for the weekend. So by doing that, you're going to say, I'm going to open a personal line of credit. Now you have a personal line of credit, you have a credit card, you have a savings account. You also decide to maybe go to one of their workshops that they have that gives free money away if you go to a workshop and you want to buy a home. So now you're getting educated by the bank. You have accounts at the bank. You also open up a certificate of deposit with the bank. So now the bank is really excited because the bank makes money off of you giving them deposits because they can loan that money out. So the bank sees that you're interested in them and they're interested in you. You want to get educated. You're also letting the bank look, I actually want to save money. I actually want to open up a loan. I actually want to start my own real estate portfolio. So you go and do one deal with the bank, but banks don't like one night stands. So you go and do the deal with the bank. You're not only going to get the initial loan. When you fix up the property, you're going to ask them, can they give you a construction loan? They may have that. You also may ask them, can they give you Can they work with you when you refi? So because you refi, they may give you even more benefits. So I get it. You're building a relationship because one, you're doing lending with the bank, you're saving with the bank, you're doing credit with the bank, you're doing personal lines of credit with the bank, you're going to their workshops and their programs, you're telling your friends and family about the bank. You're actually going to actually have your tenants, they can deposit their rent into the bank, and they can also pay you, and then you send the money directly to the bank, because what you're doing is telling the bank, look, this is a cycle, a circle. I want us to have this circle of love going back and forth. And this is how you're going to build the relationship with the bank. The bank is going to look out for you. So if that lender says, look, we're a credit union, we can't give you $1 million or $2 million for an apartment building, but we know another banker that can actually help you. And that is how you build a real powerful relationship with the loan officer, not the bank teller. And that's how I tell people to think about it. Think about it how you find your lover. And hopefully, if you do you're a good judge of character,
Love
you're going to
it.
be in a
And
good one.
I don't think I've ever read this in a book ever.
Oh, oh,
This should be a whole chapter. Is
oh,
exactly
thank
how
you.
you
Thank you.
explain it,
I
man. That's
just try
That
to
should
awesome.
be
be
a whole
honest.
chapter. Yeah.
I just try to be honest.
Yeah, no, that's
Yeah.
awesome.
How you find your lover? That's how.
Yeah.
This is the name of the book right there. Hey, this is
Got
how
you.
you get banking
Yes.
loans. But so you mentioned that the whole community bank, credit union, and this is one of the reasons why we like the commercial side so much, is because the first thing a bank is gonna really look on the commercial side is look at the asset, how it's performing. DSCR, are you gonna be able to pay the loan and then some, right? And then after that, they start kind of looking at the track record, everything else, and who's the team. But other than those community banks, have you leveraged any other
Oh,
source of
absolutely. Oh,
funding?
absolutely. I
From
absolutely.
equity, you name it, private lending.
Oh, yeah. So I mentioned that because I want people to make it tangible that everyday people can relate to it. So
Yeah,
when I first started, I actually had used like a credit union. And then once you use a credit union, then you start to become even more sophisticated. You say, look, I could probably date outside my local people on my block. So therefore, you start to talk to like a mortgage broker. And so mortgage brokers, what they do is they'll take your information and they'll reach out to like 20 different potential banks that you could work with, and they'll give you the best terms. So that's one way you can look at it. Then once you start being in the business, people will reach out to you. Hard money lenders will say, hey,
yeah,
look, we can help you do this and do that. Then what happens, as I said before, when you have that track record and then you have the relationships, you have a reputation. So therefore, you're going to have bigger banks that's going to be interested in you. So I was working on one deal where we were potentially going to do our own lending, and the seller had financing in place for this, let's say 14 unit complex, and the seller had a relationship with First National Bank. First National Bank reached out to us and say, hey, look, can you please just keep the loan with us? Don't go to another bank. We'll be so competitive. We'll give you better terms. So I mentioned that because you want to take blessings from wherever they come. And so in the beginning, you go local credit unions, then you start going to mortgage brokers, then you also talk to bigger banks, you also talk to hard money lenders, and you also have a reputation. So then you have people who want to be debt investors who may have extra cash on the side that just want a nice dividend, or you may have people who want to be equity partners and you may take them on. So I initially started on my own, and then I advanced from credit unions. I've never used hard money lenders, but they always try and date me. But I tell them, no, I'm good, son. Y'all too expensive. Y'all like getting strippers. But so what I do is I stick to my knitting, and I went from paying my own money, credit unions, using regular banks, mortgage brokers, and then debt investors. And then short term, someone may say, hey, I have 20,000. Can you give me this interest rate? And I set up a promissory note. And then I eventually advanced to the equity partners as I got bigger and bought a 24 unit, because my $850,000, as I was building my own portfolio, which is I own majority of it, 80%. I had to find more money because I'll be left with 100 grand. I know you have 100 grand. We can go buy something for $1 million. And so eventually your own personal money will run out.
yeah, absolutely. So you have to start leveraging. And you mentioned team, right? So as you get bigger and you scale, what does your team look like? And are you pulling money to do syndications? Are you pulling money to JV? How's it working out for you?
So I think that what most people should think about initially is when they first start the business, figure out what is your vision, what do you want. So for me, I knew that I wanted to have a nice chunk of ownership. And so in the beginning, I said, I'll do slow and steady. I'll buy these cheap properties, fix them out, refi them, sit on the cash on my own so I can buy enough of these units by my own where I own 100% of them. And then once my cash start to go down, then I will explore the opportunity of maybe a debt investor. So you can have a family member, an aunt, say, oh, I have 10,000, I'm 70 years old. I want it to be safe. Let's set up a promissory note, give them their money back within 1 to 5 years, depending on the relationship that you have, and pay them like 7% interest or something like that. So therefore, your partner, when you think about your team, it's not only like the people that work for you day to day, but your team involves like your lawyer, your team involves your lender. So it could be a mortgage broker. Your team involves like private lenders, so it could be family members, it could be friends. Your team involve also your property manager. So I knew early on that I wanted to manage my own business because some companies charge like 10%, 7% just to manage a single family home. And I was like, if I'm bringing 100,000 a year, I don't want to give $7,000 away. And then I said, if I get to like $1 million, I don't want to give like 70,000 away. And so for me, I said, oh, hell no, I better go read every book on property management and become really good at it. So what I said is, okay, I'm going to convince some of my family members to get their real estate license. I had my real estate license, convince my brother to get his real estate license. I told him, I said, look, if you get your license, you understand the business, you do it the way I want you to do it, then I'm going to let you become my broker, my exclusive broker when I do big deals. So I do $1 million deal, he's getting a 3% commission. And so I also figured out, how can I put some of my family members in place, because I'm a big fan of, you hear a lot about generational wealth, which I think is cool, but I talk about transformational wealth. And what I mean by that is what you're doing, you're trying to transfer and transform you and your loved ones and close friends' lives. So by having my brother involved in the business, I'm able to give him substantial amount of commission, or he's a property manager. My stepmom is also a property manager. My other brother helps out. And I was also able to help family members with down payments, and so for their homes. So what's happening is that we don't have to wait for the next generation to get wealthy. What we're doing is transformational wealth, which is helping across the family lines today and now. And that's one of the other things we do. But my team involves figuring out, how do I put my lawyers together, my broker together, my property manager together, my cleaning business together, my lenders together, so that I can make a large impact in my business. And so that's how I think about my team.
I love it, man. I think I'm gonna quote you, and I'm gonna give you the credit, obviously, for that phrase,
Oh, I
transformational
appreciate
wealth.
it.
I love it, man, because everybody talks about generational wealth,
Yes.
but the reality is, and my brother and I are working on that too, where you look on how to put your team and how to try to put your family
Yes.
inside that team, and you give them ideas. Hey, if you hone on this skill, if you
Yep.
get this license, if you learn this, come and work with us.
Yes.
Which is awesome. I love it, man.
No, it is awesome, but I mean, you hit on a key point. You got to talk to your family, and your family might not always be interested in
Oh
doing
yeah.
real
Oh
estate. I
yeah.
mean, if that's not their interest, it's not going
But
to
you
work,
try.
right?
But you try.
Yeah.
So for
Yeah, you
instance, my
try.
stepmom, not my aunt, I may not push her to go to a real estate license, but she likes to clean, or have another family member likes to clean. So therefore we start like a cleaning business. So you try to fit people in where they get in. So it's not necessarily trying to force people to do everything you do, but say,
Yeah,
look, we're trying to create transformational wealth. We're trying to help elevate the whole family in many ways. No one has to be perfect. But my job, what we do at KJ Consulting on our IG page, is we try to coach people. So you may know how to throw, you may know how to run, and you may know how to catch. My job is to teach you how to become a better thrower, how to become a better catcher, and also a better runner. Now, I
Yeah.
don't need you to know how to do all those things, but if I'm really good at what I do, what I say is I'm really good at coaching, I need to identify what your strength is, then we can go from there, and I can help improve your life. Not necessarily that you need to be a millionaire, but I want to elevate your life, especially if you're my family member. Like also one of my nieces is one of my interns. And she said, but I don't even like real estate. I said, but I don't give a damn. You're going to be a part of it and you'll figure it out. And then you just be mad and you'll learn and we'll go from there.
Yeah.
So, so that's how I look at it.
Nice.
no, no, that's good, man. Yeah, no, I hear you. You got to fit people where their strengths lie, and that's the thing, right? A lot of people don't know them. I feel they don't know themselves good enough to know where these trends don't lie, because what they see is the end result. Oh, hey, K is making good money. He's doing this real estate thing. I want to do exactly what he's doing, but then they try and do it, and they're like, I hate this.
Oh yeah, they
It's
do.
just a different, just a
Yes.
different world.
Hey, I have the opposite where it's like friends that they think that they cannot change, right? I'm too old to change on that stuff, but they do tell me, "Hey, man, I'm not gonna do what you do, but I want my kids to see you grow to do eventually what you do," which is also, transformational wealth. Because like, okay, cool, he's
Hmm.
somebody I love dearly, but yeah, he's not gonna get into real estate. But then he tells me, it's like, I'm so proud of you and what you're doing that I want my kids to learn
Yep.
from you. I don't want
Yep.
them to do what I do, but I want. He's not gonna
Yep.
do it,
Yep.
but yeah, that's also, yeah, that's transformational because you helping your
It's taken
friends
to
and
the
loved
next
ones.
level.
Oh
It's
yeah, dude,
crazy.
I love it, man. I love it.
So, we talked a little bit, about your, kind of a little bit about how you go from residential and your whole strategy, which I thought was awesome for any beginning investor to see. Hey, you could go from residential into commercial, and these are the actions you took. But I'm gonna dive a little bit back into um, what you did at Wall Street. I'm just curious because there's all this Wall Street stuff is
Oh
going
yeah,
on
that's
right
oh
now,
I
and it's
forgot to answer that
interesting to
question. Yep.
talk about.
I remember you said how was it on Wall Street? So
Yeah, man.
it was really crazy. I joined Wall Street in 2005. It was a great time. It was a class at Goldman Sachs, which one of the top investment banks. It was a class of 300 analysts coming in from college from around the world. We had training in New York, so it was crazy. I couldn't believe people from Australia, China, India. All of us were just there, and I think in my class there of students of color that were American, probably like a total of 10 as Hispanics and African Americans out of the 300. And this is a front office job where you'll get exposure to mergers and acquisitions. And that's pretty much when one company buys another company or when the two companies merge together. And we had 6 weeks of training on how to do accounting, finance, bonds, investing, best practices. We work like 80, 90 hours a week. It was so intense, the craziest job I've ever had. And then it was the only job where I actually had to work 50 hours nonstop. And the people had the expectation that you would continue. But I told the guy on a Friday, I was like, look, I'm about to faint. So I went home at like 9 p.m. on Friday and woke up on Saturday like at 9 or 10 p.m. to go to the bathroom and went back to sleep and woke up on Sunday. So it was a very intense. It was like being in the military. That job was so cool because they really give you a lot of autonomy and responsibility. So I worked on like $500 million, $1 billion deals. And sometimes I'll get sent off to Delaware to represent Goldman Sachs as a young guy who's like in his 20s, 24, what have you. And there's no senior people there. And I'm like, yeah, I represent Goldman Sachs. I'm KR, what have you. And we have the managers who are at a factory doing a walkthrough. It was just blow your mind. And so I think that what that taught me was that it's better to be approximately right than precisely wrong. And so they were of the mindset like, look, this person has enough skills and ability that they can learn the job. And so it really pushed me to think about things very differently and taught me about systems and practices. And then after that, I got the great opportunity to work at a hedge fund, a $3 billion long share equity hedge fund in Boston, which blew my mind because I couldn't believe you have like 7 people or 8 people that manage $3 billion
Manage all
and then
that.
my boss get paid like 50, $70 million a year. It just was unbelievable and unreal, a world that a lot of people have never seen. And also to be the only person of color at the time was very fascinating. And being responsible for European financials, US home builders, and UK home builders. And I spent some time doing US financials as well. And I'm like the person. I meet with 300 CEOs from around the world, and they come into our office, and I ask them questions, and my boss says, "Well, KR, he's the expert. He'll be taking it from here." And it was really crazy to be like in your early 20s doing that. But what it taught me is it gave me that confidence that look, whatever you put me in, no matter what the world throws at me, I'm going to keep coming out the corner swinging. And so that's the mentality I have, and also that you learn how to put systems in place and processes in place so that if I get hit by a bus, anyone on my team can take over very easily. And that was one of the benefits of working on Wall Street and also working for a hedge fund. You got to see how old money operate. It's like living through the Titanic where you see the new money and the old money and see how they process things and how they view the world. It'll really make you switch your game up.
That's awesome, man. How do you feel about all this stuff going on with hedge funds right now? with like Wall Street bets and all that.
Well, I think that the Wall Street has definitely changed a lot. I remember when I was younger, you used to have to pay a commission if you were a retail trader. If you wanted to buy something or sell something, you had to pay like $6 or what have you per trade. But now you no longer have to do that. You can go to Fidelity, Bank of America, Merrill Lynch, or what have you. And you can trade and not have to pay a commission. We didn't have Robinhood and all these different things. You also had to have like a certain amount of money you had to put down in order to open up accounts at certain banks, like 1,000 or what have you. So what the barriers to entry has actually become lower. So that means
Yeah,
you're going to
yeah.
have a lot more retail people and unsophisticated people playing the game. And so it's really hard for people to make sense of what's going on. I think that this is a permanent shift where you're going to have a lot more retail people entering the game, and you're going to have some of more volatility because you have so many different factors going on, as opposed to in the past we didn't have to worry about all these different things. But I
Yeah.
think that hedge funds, they're around. They're going to stick around forever and
Yeah,
long
yeah.
term money. And what's scary is that the people who aren't sophisticated and they're just chasing like momentum or some type of fad, they're going to be stuck holding the bag. So you got to make sure you still do your fundamental analysis where you're looking at the financial statements, listen to the earnings calls, reading the press releases, making sure you feel comfortable. What I do now, I invest in a lot of companies, and no, I invest in a few companies. I believe you got to go for the jugular and go deep and believe and have conviction. So the companies I invest in, like Amazon or Facebook, are Amazon, Facebook, or Pfizer or something like that, the companies I really believe in, I have a lot, Apple, definitely, I have a lot of conviction because they're my partner. I see them as business partners. So
Yeah.
I'm at the point where I'm willing to put several $100,000 down on an investment. When I was younger, I would be a buy and hold guy and put $6.99 down to buy a fraction of a stock. I'm no longer there. I'm with the big boys now. So I want to be able to sleep at night. I do
Yeah.
not want to be like, oh my goodness, is GameStop going up or go down? Oh my God, I lost all my money. Nah, son. First rule of investing when you get to a certain level is return of capital.
Yep.
And then the second thing is don't forget the first rule. So once you reach that status that you feel comfortable with your life, you don't want to be jeopardizing it. Nah, I was already poor, son. I ain't trying to go back.
I love it, man. I love it. Well, man, it's been awesome talking to you. We're going on here 30
I
minutes. I'm
got
sure we
one
could go
question.
on for forever. German, go
I
ahead.
got
What's
I
the
got
question?
one question, man. The last one. And we talk about barrier to entry now. The with the stocks and all that stuff. You know, you don't pay commissions, all that stuff. What do you think about no money down, or yeah, for real estate, or that you don't need any money to start real estate?
All right, so there are two things I want to mention. I'm going to get to that question. The hype that everybody's saying no money down to start real estate. One is if you really like the gems that we're dropping, I have a course this Saturday from 9 a.m. to 1 p.m. and I'm going to teach all my frameworks, give you Excel, what have you. We're teaching that course, and any of your listeners, the first 5 that decide to sign up, I'm going to give them a 30-minute free consultation where I'll talk to you for 30 minutes, answer any questions you have free of charge. And so that course is our virtual boot camp. The way you're going to sign up for that is you go to KJ Consulting, and it's in our bio section. You just click on the link and you can sign up to be a part of our membership where we'll send you emails about what we're doing, but you also can sign up for the course. And that's February 20th. That's this upcoming Saturday. The second thing is the best way to reach us is on our IG, KJ Consulting. But this question about no money down or very little money down, one is that is only possible if you really understand creative financing. And creative financing is not easy or for the faint-hearted. It's very, very risky. And so in our course, we talk about creative financing. Most of the time, you got to have some type of money down, unless you're going to live in a residence. If you're going to live in a residence, then you could probably get away with no money down if you're like a doctor or a lawyer, because they have 0% down type of programs, or you're like a veteran, they have very little, or you do a FHA loan, you put down like 3.5%. But most of the time, you have to put some type of money down unless you know how to think outside the box. And thinking outside the box means that you're leveraging your relationships, where you may have a family member or a friend or someone who may give you the money for the down payment, or you may do a hard money lender for the down payment. But I do not advise people who are brand new to the business to take on so much risk where you find yourself maybe having to file for bankruptcy, or you destroy your credit, or you destroy a relationship with a friend or a family member. I think it's very important that you walk a very fine line. And I tell people, what we say is, when you get into business, I'd rather for you focus on the easy breezy cover girl houses and easy breezy cover girl type of situations where the deal will not set you back in your relationships or financially. You're able to go in there, you can fix it up, you put enough money down. If you can't afford a house for 50,000 and a certain neighborhood, so 50,000, you may have to put 5,000 down, 10,000. Go find a house cheaper for 22,000 or what have you in a different market. You don't have to invest in your backyard. But I said people need to figure out what their hitting weight is, or their hitting class, and focus on that. And then we can go from there. But I had a great time with you guys. I hope that some of your followers decide to follow us, and we're going to be dropping gems. We're trying to change the game. For me, it's not about getting a mentorship where I make money and you guys help me pay my bills. I love you whether you sign up or not. I just think that there's so much misinformation out there that I want to help people, because I'm not self-made, I'm community made. So people like you help me, family members, friends, the community helped make me who I am today. I'm not great because I woke up like this. Unfortunately, I'm not
Absolutely love
Beyonce.
it, man. No, love yeah, love it, man. Just like you, we're all trying to make it. And I think these days the issue is not the information that's being withheld. I think the issue these days is that there is so much information out there.
Yes.
You could learn it all on YouTube, you can learn it all by Googling, but then you have information overload. I think now it is more than critical for people to find a mentor, to be like, hey, this is what you should pay attention to, and this is good, but you may not be ready for it yet, kind of thing. So there's so much information out
Oh,
there.
I agree. I
You know,
agree. Like a lot of the difference between my course and a lot of other courses is that we're not doing a one night stand. So you sign up for my course, you get the 4 hour lesson, and then we're going to send you information. Then we're going to do we're going to check on you once a month for the next 12 months to make sure you do what the hell we said. You're not going to embarrass me. So what we're trying to do is we're letting you know we're invested in your success. Selfishly, we want you to be successful so we can brag about you and put you as one of our testimonials. But the other reason is because we just want people in the community to experience transformational wealth. And we think that we have the best solution, the best secrets. And I think you got to check the receipts. People out here preaching and stuff. If the people don't, you teaching people about credit and you got bad credit. You can look on my page, you'll see my credit score is over 800. You talking about real estate, but you don't own any properties. You can look at my page, you can see my name is on the properties. God willing, that's a blessing. I never thought I'd
yeah.
be a black Donald Trump, but not in the bad sense, in the good sense of owning property. So it's just to inspire people. So I hope that people would follow you two, because I talk to my followers. You should follow these two brothers because they're doing their thing, and we just need to continue to put out those positive role models. I think that's what's going to change the world.
No, absolutely, man. And being Latino, there's not that many of us out there doing this stuff. So for us, it's a sense of pride too. But this episode will be on our podcast as well. If just tuned in on IG, so feel free to reach out to any of us. Anywhere else they should find you other than IG.
Our website, you go to our IG KJ Consultant page, and in the bio section you can click on our website and you can sign up with your email, and then we'll always be in touch. But we do investor updates, so you can see how we're transforming our own portfolio and some of our goals for the future.
Okay, awesome, man. And and for all our listeners on the podcast and IG as well, go ahead and follow KR. And then also for us, we have our free ebook we just launched. We have a couple other resources, a digital planner that we just launched for 2021. And then we're also launching a course come March timeframe. So check that out. Give us some feedback. Let us know what you like about the ebook. But obviously it was amazing talking to you, brother. We'll have to stay in touch.
It was fun. Thanks for having me. You
Yeah,
guys are
man.
you guys are out here being legends. So
No,
it's
you are.
no. I'm just, for me, it's a blessing to be able to give back and inspire people and to just wake up every day and want to do cartwheels and backflips. I used to do it when I was younger. I can't do that crap anymore.
I can't
But
do it
I'm
either.
just excited. It's really nice to be able to go from, I remember in 2018 when my rental income, let's say, was $85,000 for like the whole year, and now I make close to $100,000 a month in rental income. So
Nice.
it's just like someone like me who come from really humble beginnings, not the smartest cat or well, I am the best looking cookie in a jar, but that's a different thing. To be able to achieve transformational wealth is just amazing. So I'm glad I was given the opportunity to put out my story today.
Oh man, that's awesome. And we got to change the color of, in the diversity of the people who are succeeding in the real estate
Yes,
industry, right?
spread the
I mean, I
love.
can't tell you how many rooms we get in, and we're the only Latinos in there. We're like, what the hell?
It's crazy. It's
Yeah,
crazy.
we're working on that too.
Yeah.
All right. So it was a pleasure. I'll talk to you. And
Thank you.
for anyone that's listening, what we do on Tuesdays, we have our live check on KJ Consultant. We have a live chat. We do it 12 p.m. to 12:30. So after this, I'm going to hop on that. We have one theme question we talk about every week, but we have an open cipher. You can ask any questions. So hopefully you guys check that out. And it was a pleasure. Talk to you guys soon.
All right.
Hey,
we're
thank
out,
you,
man.
brother.
Thank
Take
you.
care.